We discussed in the previous session that future of Islamic banking in its true spirit depends on Islamic banks, not on those conventional banks that are doing Islamic banking also as a side business. But currently, Islamic banks are facing risk of dilution because of conventional banks entering Islamic banking market. This was explained in the earlier session. It is not unlikely that Islamic banks may cease to exist or may exist only on the margin of the banking market. The dilemma now is that the future of real Islamic banking depends on Islamic banks, but future of Islamic banks is presently uncertain. Islamic banks need to secure their future, not only for their own sake, but also for the sake of Islamic banking. There is urgent need that Islamic banks get together to develop a long-term agenda and a strategy to acquire a prominence and distinction in banking market so that they can make efforts to give Islamic banking the future that it deserves. This long-term strategy will be subject of discussion in later sessions. In this session, I will discuss only the simple question: what Islamic banks need to do in immediate perspective that will help them to survive as a distinct institution so that they can give Islamic banking a future that it deserves. And I will explain only two simple things in this session that Islamic banks can do immediately. First, Islamic banks need to prove their role in financial inclusion. The world is concerned that an estimated 50% of working age adults globally have no access to the formal financial services delivered by financial institutions in the formal sector. This proportion is likely to be much higher for Muslim world because a substantial proportion of Muslims, despite having capacity and access to use the services of formal institutions, keep away from them because they deal in interest. Even many large businesses in present-day Muslim world take this stand and avoid doing financial dealings outside banking, avoid doing financial dealings through the interest-based banking system. Islamic banks have an opportunity to gain substantial attention at national level as well as at global level if they can produce statistics to show how much they are contributing to financial inclusion. They can get these statistics easily by adding a few questions in their forms for the customers coming to Islamic banks to open their fresh accounts for depositing their money or for seeking financing from them. If they can substantiate their role in enhancing financial inclusion, the world will be willing to provide them necessary assistance to enhance this role, and Islamic banks will have distinct place in the banking markets in Muslim world. Let Islamic banks or some researchers provide this information to help the Islamic banks distinct position. The second point that Islamic banks can emphasize is that Islamic banks are contributing to wider circulation of wealth in the economy, which is an objective of economic objective of Sharia. It is a common knowledge that conventional banking system collects deposits from a very large number of depositors and advances them to a limited number of large businessmen. This is understandable. The interest-based products protected by robust legal system to ensure easy and quick procedures for recovery reduces the risk of default. It is therefore cost-effective for conventional banks to concentrate on few large clients for advancing or investing depositors' money. On the other hand, Islamic banks, partly constrained by Islamic rules about recovery and partly constrained because of the lack of legal and institutional support for recovery of its funds in Sharia compatible way, face a large risk of default on their asset side. It is therefore efficient for Islamic banks to spread and diversify their assets to reduce the peculiar risks faced by them. And this may actually be the case. And if this is the case, then despite the similarity with conventional banking model, the Islamic banking may be contributing to the one element of Sharia objective of Islamic financial system, which is to increase circulation of wealth in the economy. In this scenario, what Islamic banks or any researcher needs to do is find out ratio of the numbers of users of Islamic banks' funds to the number of depositors in Islamic banks and compare it with the same ratio in conventional banks. The higher the proportion for Islamic banks, the more they will distinguish themselves from conventional banking in widely circulating the wealth, and hence they will justify their existence and rationalize their existence. Islamic banks can do this exercise and reveal their data towards contribution to the wider circulation of wealth in the economy and hence to the economic objective of Sharia. If Islamic banks can prove at least these two features, the financial inclusion and the wider circulation of wealth in the economy, it can make them a good case for them to justify their existence and growth as institution of economic change. Islamic banks can find some other claims also. For example, they can claim that they are keen to develop mechanism to increase supply of participatory capital in the economy, particularly for the potential entrepreneurs who do not have creditworthiness to borrow startup capital but are business worthy because of the human capital they have. There are many other features that Islamic banks can highlight from their philosophy and from their concept of banking and from their commitment to the Islamic economic and financial policy. They will be discussed in further detail in later session. Let us agree in this session that Islamic banks have a good case to distinguish them in the banking market and show that they are contributing more to the financial inclusion and they are contributing more to the wider circulation of wealth in the economy than conventional banks are doing.